So during the bull run, everyone is making money and raving about how good of a trader they are and blah 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 blah. But during the winter, this is where the bears can drag everyone down and even some are cutting losses. And to be fair, we never really know when the dip is coming because this could be the beginning of the dip or more dips could be happening. Or this could be a flash crash as well and could be the only dip that we experience before going into the bull market once again. So today, I want to share my strategy on how I manage my portfolio so that it can withstand a crash and also profit well in the bull market. So let's get started. Hi, my name is Jordan and thank you guys so much for tuning into the channel where we talk about personal finance. But today we are mostly going to talk about how to withstand market crashes. So on the 21st of January, almost $1 trillion was removed from the crypto market, and this caused fear, uncertainty and doubt, or something we know as FUD. And the market doesn't really like FUD a lot because it tends to cause very huge movement in prices, which can lead to cascading effects, which can lead to prices of tokens dumping really hard. And Bitcoin, for example, lost $10,000 in value in a 24-hour span, which is really ridiculous, and this led to paper hands or people who are not able to withstand price dropping, starting to dump their holdings as well, which leads to a cascading effects of people offloading their assets even more and causing the market price to drop even further. So this brings me to my first method that I use to protect myself during the crypto winter. And for those of you that don't know what crypto winter is, it is a period of time where assets will trade at a very slow pace, usually sideways movement with very little volume. So just imagine it as a winter period where people do not go out as often, streets are empty, and there are basically not much activities going on, and basically it's a dead market. So the last crypto winter happened in the late 2018 to early 2019, where the price of Bitcoin moved very little and there was very little overall movement in the whole crypto space. And according to crypto experts, we might be seeing the beginning of the crypto winter happening really soon. So to prevent yourself from panic selling during the crypto winter, the first thing you need to do is to smash that like button for the YouTube algorithm. So the YouTube gods will distract you from hitting the sell button, but instead watch more videos like this. And hit the subscribe button if you haven't as well. But in all seriousness, the first thing you need to do is to prepare yourself with holding power. So holding power refers to having backup funds to tide you through dry periods of the year where there might be very little to no crypto gains. And the first way to do this is to invest only what you can lose. So this prevents you from over leveraging and ending up to sell your assets for lower prices, which means losing money. So to further explain this, what you can do is to portion out your money into sections where you only invest an allocated sum of your income, and this way, if the investment goes south, like how Bitcoin is doing now, you do not have to make major life changes to your lifestyle.
So you made a life-changing decision to not change your life at all.
But by doing so, you will have to understand that you might not get the insane ROI that many people are raving about, but we'll get into that at a later part of this video. To add on having holding power, doing your own research and having a plan is also important. So this way you'll know what tokens you'll need to buy when your salary comes in, and you'll not be swayed by influencers whose primary job is to influence you to purchase a certain token that will, in a way, pump their bags.
Pump. How's your pump?
So how can we increase our holding power so that we do not panic when the dip comes? So for those of you who are new to this channel, this is where I'll promote my YouTube portfolio. So the YouTube portfolio that I'm building is tracking the top 10 cryptocurrencies by market capitalization, or market cap for short. So with this portfolio, I'm literally creating my own crypto ETF. So in the portfolio, we got the top 11 tokens because we're excluding USDC. The reason we exclude USDC because we're already holding USDT, which is a primary currency that we are using when purchasing our portfolio tokens. So far, we are still on a downward trend, but I would like to hold on to this for a year to see how it's performed in the next coming months, and maybe at the end of 2022, we can do a review to see if buying the top tokens based on market cap can actually bring us any benefit or profit in that sense. So as mentioned, in this portfolio, we do have some USDT as a holding as well. Though to some, it might seem like a stupid thing to do because USDT is pegged to the dollar, which does not grow in any point. And however, now having USDT is where it shines. As you can see, our YouTube portfolio consists of 11 different tokens, and each of these tokens have different percentages because we buy them according to market cap when the token falls out or enter the top 10. And when we do so, we'll purchase it as well. So currently we are in our 3rd month into this portfolio, and we have roughly about 300 USDT that we can activate to purchase more of these tokens to lower our purchasing cost of these tokens that were already purchased when it was a little bit higher. So the 300 USDT can be divided into 10 tokens that we have excluding USDT because we don't want to hold it right now, which is not beneficial for us. Which means that we can purchase an additional $30 worth of tokens, and by doing so, we can leverage on Crypto.com's Earn program to boost our earnings as well. But this isn't saying that you need to have USDT. It can be any form of stable coins that you want to keep for your profits if you are taking some, and I highly recommend taking profits if you already have profits. So some stable coins that you can consider is like UST, where you can get 20% APY on Anchor Protocol on a flexible basis. And I've got a video on that and I'll leave it in the card above. Most centralized exchanges do have an Earn program that can enable you to earn anywhere between 5 to 14% APY for depositing your stable coins into the program. Like Crypto.com, it gives you 8% on a flexible term and scales to 14% for a 3-month lock. And by doing so, you are constantly building a small war chest that can come in handy during a downturn like now, which enables you to enter the market to dollar cost average and increase your token holdings. And this brings me to the next point, which is always be earning. So if you guys didn't know, I came from a sales background where we were taught to always be closing by making people say yes 3 times in a row.
Yes, yes, yes.
And I realized that these can also be applied into investments. So as mentioned in the previous point, we can leverage on Earn programs to build war chests that can be used during our downturn. But on top of just building a war chest, we can also use it to constantly grow our token holdings as well. So this method might not work for all the tokens, but majority of tokens these days do have a DeFi protocol, an Earn program, or a deposit bonus that will enable you to constantly earn tokens regardless of market movement. So during bull runs, you'll be earning some tokens, and during bear markets, you'll be earning some tokens as well. But do keep in mind that this is considered the slow way of making money because you're looking at a yield of 4 to 50% APY per year, which is considered really slow in the crypto space. But personally, I like it a lot because number 1, I do not need to constantly monitor the market for price action because I'm getting daily or weekly APRs just for holding these tokens. This means I'm earning money every single day without doing much. And number 2, it gives me more time to focus on things that are really important to me. So like creating content for my YouTube channel, my day job, having dinner with my loved ones, play with my dog, etc. So you see, to become rich or wealthy, there are quite a few ways to approach it. The active way is to trade your way there, be it in stocks or cryptocurrencies. You'll hear stories of people earning 5-digit gains or 6-digit gains overnight. But there are people that lose money as well, mainly because they're trying to time the market and trying to enter when it dips and exit when it pumps. But let's be real, by doing this, it will mean that my full-time job will become a trader, which is something I don't think I'm capable of, and I would not want to do so as well. So this brings me to my way of getting rich, which is the passive way. So the passive way isn't all exciting because there will be very little 3 times, 5 times or 10x pumps that happens all the time. The way I put my money into crypto is the same way I put my money into stocks. I pick tokens that allows me to constantly get returns in form of stakes. So stakes are somewhat like dividends where the token holders get rewarded for holding the token. So there are quite a few tokens out there, but not all tokens can be staked. So for example, if you're holding Polkadot or DOT, it can be staked. And if you have 120 DOT, where you can use it on a delegated proof of stake, where you can earn 12% APY on DOT tokens, and you can auto compound it as well. Otherwise, you can put it into an Earn program on various exchanges that will enable you to compound your earnings without even logging in. So some of the tokens that I have in my own portfolio include Bitcoin, Ethereum, DOT, Luna, UST, Solana, CRO, and Phantom, and these are all in my personal portfolio, and I'm just holding these tokens, and they are all either staked in an official wallet, in an Earn program, or in an exchange, or in a DeFi protocol where I can earn yields. And the APY that I'm getting from my portfolio is roughly 8 to 200% because each token has their own staking mechanisms and the payouts are different as well. But I gotta be real here, this portfolio isn't for everyone, and let me explain why. As mentioned above, the portfolio is a very slow way of growing money. So on average, I'm getting roughly a couple $100 from an $18,000 portfolio, which comes up to maybe 13% APY, which is ridiculously slow in the crypto space. It's so slow that I think I might lose some subscribers after this, but if you appreciate the honesty, do subscribe to the channel and hit the like button as well. But one of the benefits of my ridiculously slow portfolio is that regardless of the bear or the bull market, I'm earning some tokens every single day, which puts me in a great position, and here's why. So imagine during the bear market, if you have sold all your tokens or all your coins and you held on to cash waiting for the bull run, which we know is pretty much impossible to time.
Impossible.
While I'm just here with my portfolio gaining a little bit of tokens every single day, and I'm buying in when I have extra cash. And let's say the bull market lasts a year, which is something that is highly likely to happen and has happened before. So with my small little token earnings every single day compounding during the bear market, I will have amassed much more tokens, and when the bull market comes, I have additional tokens to sell for profit, of which I can use and reinvest into other projects. But this video isn't about telling you to follow what I do, but I do hope that you treat this as information to expand your knowledge on how you can leverage on the tools that the market provides, which can help you achieve your goals as well. Like I said, you don't have to trade to be rich, and there are more than one ways to reach that goal of wealth and richness as well. So one of my favorite tools here is Jorden. They do pay interest in Bitcoin, Ethereum, USDT, USDC, as well as DAI, which are all stable coins. And they can help you grow your tokens at a pretty fast rate. And if you sign up with the link in the description, you will get a bonus when you deposit at least $1,000 worth of supported cryptocurrencies into your wallet. So this brings us to the end of today's video. If you are looking for an exchange, I've left my favorite exchanges in the description down below. If you haven't, do smash that like button. Subscribe to keep up with the YouTube portfolio that I've built, and I'll see you in the next video.